Hey, what up, family? I just wanted to record this video, um, which is an update on the S&P 500 because we talked about it yesterday in class. And yesterday when we were in class, the market was here, and you know what I was saying is, we potentially had a one, two, um, three, four, five wave move here, in the S&P, right? And so what we were looking for at that point, I told you guys, I'm expecting another drop. Okay. So from our sell zone. So we actually, um, as we push play, you'll see we actually got a drop here, right? Really nice drop from that area. That thing dropped over 200 pips. And what we saw today, if you watch, man, the market just kind of got stuck in this sideways corrective sequence, right? And you guys know, I was telling you guys from the weekly outlook, what I had drew up on Sunday was, we're expecting another drop, right? We wanted to be able to sell, as long as the market came within our sell zone. And so we drew this up as our sell zone, right? Which is the 88.6 and the 78.6, pullback area. So the market came there, and so it was a beautiful drop. So we were looking for, some type of continuation, right? The weekly outlook is telling us, right, we want to look for a drop here, and we want a stronger drop to the downside, potentially, back to the bottom here. I want to be in constant selling, on balance, right? Want to look for sell opportunities. But as today unfolded, right, as I was looking for continuation sales, the market just stalled, and it ended up creating this new higher high. Okay, right up in here. Okay, and so, and so for those that are Elliotticians with me, sometimes we got to switch up our wave theory or our analysis. I originally thought that, this market was creating, an A, a B, and a C. And after that C, we were going to get that drop. Um, and what happened, and I'm sorry, I did that wrong. What we're looking for on balance is we're looking for this market to complete this a B, and a C. So we're looking to complete this B wave. Okay. Now we know that B waves can become complex. So what I'm seeing here, right, is as we completed a B wave, which is a three wave move, I thought that we were completing the B wave at this high. That's why I was looking for that continuation. But what ended up happening, and what changed the color here, is you will see the market created these sub three waves, right? Which means that this B wave really just became more complex, right? So instead of being an ABC B wave, um, it's going to be considered this WXY, right? And you could just see the three waves playing in each of, you have a three wave sequence in the Y. We have a three wave sequence within the X, right? And we have this three wave sequence within the W. Okay. So these are called double wave combos, right? So when you get into a corrective sequence, we have to be able to, this is why I like to study corrections, because this is where, people get confused. Okay. And so I'm trying to stay in rhythm, even though the market created this higher high, right? It's still within our correction, right? Now, for those of you that understand supply, so I'm going to get rid of this. Okay. For those of you that understand supply and demand, there's something that I want you guys to identify, right? So S&P is a 500, is a psychotic pair, right? And a lot of times the psychotic pairs, right? We use the algorithm within price zone would typically use, like a 30 minutes area of supply or demand, right? So if you look at this structure, this is a typical rally, and this sideways correction is a base. And then what we have here is a very fast move from this base, which we would call the drop. Okay. So we got what we said, this is a rally. And I should have saw this too, right? This is a base, and then this is a drop. So ultimately, what we want to see, right, if we create an area of supply using the basing candle methodology, we want to see the market come back into this zone. So as the market comes back to this base, then what we should see is the market rejecting. And that's what it did, right? It missed it at first. It came back up and rejected. So now we've rebalanced the market at our area of supply. We believe that, we're still within the correction, right? In the bigger correction, because overall, remember what we're looking to do? We're looking to create or complete this A, this bigger B, and this C. Okay. And on balance, right, we could really see the market even get down to the 65.34. So I wouldn't be surprised if we see the market push down. So now, and let me hit play here, right? Just because we hit this base, which is what we're seeing, we're seeing the market react here at this base, this area of supply. On balance, we should still be in sell mode. Okay. So what I'm going to do, right? Come down to this 15-minute time frame, right? And hit this is how this is a true breakout, right? We're getting that dying trend formula. Looking at this on a 15-minute, right? We got divergence as that market created that higher high. So now we're rejecting. Okay. Now this is where, as traders, right, if we're in rhythm, we can stay patient. Okay. So on Sunday, what I said was, and I'll show you guys this real quick. We'll pull up the S&P on Sunday, right? This is, never mind, this is old. The S&P. Well, anyway, I'm not going to pull it up because I would have to. Anyway, what we said on Sunday is once the market rejects here, right, we're going to look for rejection. As a matter of fact, we're just going to pull it up. We're going to pull up what the weekly outlook was on Sunday. All right. So the notes told us on Sunday is we're looking for potential short-term sell. Wait for the first impulse down and then correction for the potential entry, right? So just like we had a impulse down here, we're waiting for a correction. So now, right, this exact same instruction, right? And we'll go back to the clean chart. This exact same instruction still applies here. Okay. What we want to wait for an impulse and correction for potential sell. So what we're waiting for, which is what the market's doing now, right? We're allowing this market to impulse down. It's rejecting hard, right? This is what we want to see. Now we just need to wait for that correction back up. And this is where we'll be able to find our impetus, and identify a lower risk to reward opportunity. And then this is where we'll begin to look for our sales. Okay. So it looks like, the market is impulsing down. We don't have to be a part of this. We can allow it to impulse down. The market doesn't move in a straight line. It's going to correct. We allow it to correct, and that'll be our opportunity to engage. Okay. So that's what I'm looking for with the S&P. For those of you that are trading it, just stay in rhythm. Make sure that we're we're waiting for the impulse to complete. We're waiting for a nice correction. We leverage our impetus areas, and then look to engage. All right. All right, guys. So that's all I got tonight. You guys know what I'll be looking for. You guys be blessed. We'll see you tomorrow in the Price Zone channel. You guys have a wonderful evening.